Welcome to Investors Insights. I'm Greg Powell, President and CEO of Five Plan Partners, and I'm joined here today with my distinguished colleagues, Ty Miller, Trey Booth, and Bobby Norman. We've got some great information for you today in relation to the markets and the economy. And our topic today is how high can we go? That's a question we're being asked by our clients on a regular basis. It's been a very interesting year. And in addition to that, it's hard to believe that in less than 60 days, we will be in the 2026 year. So with that, Bobby, I want to come to you first. Really liked what you were talking about earnings. We've talked about that through this whole year and watching that closely. And as we share with our viewers today, what we're looking at, I thought you had some great points.
Yeah, so for the past few weeks, I've been talking about how we had concerns about a spike in delinquency rates in credit cards, a spike in job layoff announcements. But while there have been these type of concerns coming up almost every week recently, one of the most important parts of what drives stocks prices has been coming in very positive, and that's corporate earnings. You can see in this chart that 82% of companies in the S&P 500 beat earnings expectations in the third quarter. That is above the four-year average of 76.3%. And we're also seeing that year-over-year earnings growth rate for the S&P 500 stood at 13.1% as of November 7th. Should this hold, it will mark the fourth consecutive quarter of double-digit earnings growth for the companies in the S&P 500. Now, the question is that can the current beat rate continue? Well, analysts at research firm FactSet believe they can. And so estimates for record earnings are notable, especially given recent multiple expansion. So with the S&P's forward price to earnings ratio, a good valuation metric we look at 23.1 on October 29th, well above its 10-year average of 18.6. The question is, are equity markets overpriced, or are lofty valuations being justified by consistent earnings growth? And we'll continue to follow earnings beats for the fourth quarter to see if earnings growth will win the day against other negative news in the market right now.
Yeah, and Bobby, I think it's appropriate at this time because that's great information. But through our social media, LinkedIn, Twitter, Facebook, our YouTube, our podcast, we're going to keep people up to date on what we're doing in watching this closely. So Instagram's another one that we recently started to, and I've gotten a lot of positive feedback about that. But yes, we do these vlogs at the first of the week to send out to clients, but we're going to continue doing different things that way too to communicate what we're seeing out there. And Trey, you picked on one of my favorite topics here because a lot of times when we're talking about portfolios at Five Plan Partners, we not only talk about the fundamental analysis, but we also talk about the technical analysis. We use it a lot here. And you brought up some great points in relation to what Bobby just disclosed, looking at fundamentals or earnings. Talk to us about the technical analysis.
Yeah, thanks, Greg. Yeah, Bobby made reference to a very important data point, which is the price to earnings ratio of the S&P 500. That's what a lot of people reference when they say the stock market's expensive or cheap. It's the PE. What Bobby talked about, the fundamentals, was the E part. And the E is going up, which is great. You really want to see that. What I'm going to talk about is the technicals, which is the P, the price. What is the price of the market? And is it going to go up or is it going up with earnings? Because the PE can get bigger if P goes up and E goes down, or vice versa. And so Bobby pointed out how the earnings part is growing. So let me show you this chart. This is the S&P 500. Over the last year, and you can see there's a lot of lines on here. The top line is the price of S&P 500. Then the light blue line is the 50-day moving average. That's an important key technical point. And why is that important? That is the average price that recent buyers over the last 50 days have bought in at. And so that's important because the last dollar in is usually first dollar out, right? And so if you just bought into the market and it dips and it gets back to where you're even, you have to make a decision. Do I want to get out because I got in at a bad time, or do you double down? You can see here that the S&P has dipped to that blue line several times this year and then bounced off. That's important because what that is, that's creating what we call a floor in the market, where investors who recently bought in they're getting back to even, and they're not saying, all right, I want to get out. They're actually buying back in. That shows confidence in their initial investment that they want to put more money into it. And then you see a bounce off that floor. And so the key number we're watching is 6,646 with S&P 500. That's been a recent floor. Now, this is very short term in nature. So, we don't want people to be day trading on these numbers, but it's something we're watching because Bobby's point about the earnings, those fundamentals, those only get updated once a quarter. But the price, the PE part of the PE updates every day. And so we got to combine those two to get a good feel on how high the market can go. Can the earnings continue to drive that price higher? And it looks like, based on the technicals, we've bounced off this higher floor. And if we do cross below that floor, then the next floor is 6,344, still not that far from here. So there's a lot of good support. So even if we do trade off, now we never like to see the market down, but it is healthy to have these tests to see where the market is going. You want to have these retests. You don't want things to go straight up because that sets a bad precedent, and then there's a lot more further to fall. But it looks like we're building a pretty stable floor here to build on to go into the end of the year. So can't promise anything, but things are looking good from a fundamental standpoint and surprisingly good from a technical standpoint based on how the market moved last week and closed on Friday.
Yeah, I thought that was excellent, the way you explained it in our meeting this morning and again to our viewers. And let me say this to everyone. If you got the pen and paper close by, write down. So correct me if I'm wrong, Trey. The floor right now is 6,646.
That's right.
On the S&P 500. Write that down. That's something you as viewers can just participate and watch. And the next floor after that is 6,344, correct?
Mm-hmm.
Yeah. I encourage people to do that. As Trey said, we're not day trading on that. We basically, though, it's a great way for you to understand more about technical analysis and things that we look at. And then, Ty, we've had a lot of conversations about government shutdown. You've done a fantastic job this year as that occurred and keeping everybody updated about the ramifications of government shutdowns. And I think we've definitely lived through one here. So bring everybody up to date as to where we are on the government shutdown, the impact, and what we're seeing.
Yeah, so the longest government shutdown in history ended last week. And so we're through that. We're happy to be through that. And now we're kind of looking out towards the end of the year and specifically towards 2026. So going into next year, we have a combination of business and consumer tax cuts that should come in around $285 billion of extra stimulus into the economy in 2026. While the Fed is more accommodative, cutting rates, we're no longer contracting its balance sheet through quantitative tightening. And so we have a lot of positive factors going into 2026 as far as stimulus goes. And while we didn't get a lot of surveys during the government shutdown because a lot of that data needed to have government employees, we do get some third-party surveys, and one of them is the Chief Executive Group CEO Confidence. CEO Confidence spiked higher despite being in the shutdown. These results are from November 10th. CEO Confidence spiked higher. We're not running too high, but as you can see in this chart, times like 2008, 2009, confidence is very low. Makes sense. But now we are starting to see that ramp up again. And so we got some interesting commentary as well. Optimistic for continued improvements into 2026. They've noticed increasing demand in recent weeks. Capital projects that were on hold starting to be released as new orders. Lower interest rates, clarity around tariffs, improving inflation. All of this stuff is helping guide CEO confidence a little bit higher, which is important because as you can see in these next charts, CEO confidence as it's raising, they're expecting to hire more people in the next 12 months. That is starting to gain some footing, gain some traction. They're expecting revenues to increase over the next 12 months. And also you see it in deal flow. We have M&A deal flow starting to really ramp back up as we have a more accommodative administration and DOJ as far as it goes with deal flow. And we're also starting to get IPO, which is initial public offering. That's more companies going public. They were private companies choosing to go public. You can see back in 2023, we had hardly any coming off of 2022. Usually companies like to go public when the market seems to be more accommodative for them. And so now we're starting to get that spiking up as well. So a lot of positive stuff here from a lot of the big executive office suites that are running these companies.
Great insight. And, think about the information we've shared today. A lot of positives. So as you're wondering how high can this market go, there's a lot of positives and momentum out there. Keep in mind, we will always be alert here at Five Plan Partners, ready to take action if needed and coordinating it in relation to your financial blueprint. We thank you for watching this vlog, and especially those of you that continue to forward it to others. The introductions we've had from it have been fantastic. We hope you have a great week, and know, as I always like to end every day, we come through the doors making sure that we're striving to see to it our clients have better, richer, fuller lives. We thank you. Talk soon.